In the run-up to its conference call for Q2 results on August 11th at 4:30 p.m. ET, GEVO is hard at work trying to demonstrate its ability to secure funding through credits while showcasing its potential for growth, both in terms of strengthening its financial position and advancing its renewable energy and sustainable products. This has led to the first sale of carbon abatement into the market. A global financial and technology company has purchased high-integrity durable carbon removal credits, known as CORCs, which are Puro Earth certified and ready to retire immediately. These credits provide true carbon abatement by permanently removing actual carbon dioxide from circulation, offsetting the effect of emissions. This sale supports the buyer's decarbonization efforts and mitigates its corporate travel emissions. The CORCs sold by GEVO are generated from its North Dakota ethanol production facility, where CO2 is captured and sequestered through carbon capture and storage, CCS. The facility has a suitable geological formation and operational Class 6 well for CCS, with a total estimated sequestration capacity of up to 1 million metric tons of CO2 per year. The supply of credits is certified by Puro Earth under its strict standards for permanence and other key quality parameters required by customers. GEVO's CCS technology is a key part of its decarbonization strategy for sustainable aviation fuel, SAF, as it develops production on multiple pathways. According to Alex Clayton, Chief Business Development Officer for GEVO, the company is generating real sales of credits for carbon dioxide removal that are being generated right now. He emphasizes that customers should feel confident in the CORCs provided due to the rigor GEVO and Puro.Earth are putting into every step of the process. Trenton Spindler, Chief Growth Officer at Puro Earth, notes that GEVO is demonstrating that durable carbon removal is available now, and with Puro-certified CORCs, buyers worldwide can act decisively to tackle their toughest emissions with confidence in real, permanent results. GEVO has also entered into a tax credit transfer agreement with a bank, securing $22 million worth of clean fuel production credits from ethanol production in 2025. This deal provides near-term funding for GEVO while preserving shareholder value without issuing equity or debt. The agreement also includes additional rights for the bank, such as the right of first offer for up to $20 million of extra 2025 credits and the right of first refusal on all 2026 credits. The $5 million in immediate proceeds from the deal is expected to strengthen GEVO's liquidity position. The $22 million in contracted 2025 credits validates credit market demand and hinges on successful ethanol output by year-end, making it credit positive. These agreements build on an earlier purchase of $40 million by Barclays Capital for newly issued non-recourse tax-exempt private activity bonds issued by the Iowa Finance Authority for the benefit of GEVO's wholly owned subsidiary, GEVO NW Iowa RNG, LLC. The bond proceeds were used to refinance $40 million of previously issued Iowa Finance Authority solid waste facility revenue bonds, which were secured by an irrevocable direct pay letter of credit. This partial refinancing has enabled GEVO to release $40 million of restricted cash that was securing the letter of credit and increase its balance sheet liquidity by approximately $30 million after paying transaction costs and funding reserves associated with the bonds. GEVO expects to release additional restricted cash later this year by refinancing the remaining balance of the previous bonds through the issuance of an additional series of 2025 bonds. This move is expected to further improve the company's liquidity position and provide additional financial flexibility. GEVO's subsidiary, GEVO RNG, generates renewable natural gas by collecting manure on dairy farms and placing it in anaerobic digesters installed on those farms, where biogas is captured and refined to serve as a more sustainable alternative to fossil natural gas as a transportation fuel. GEVO RNG sells the RNG into California via a marketing agent and has received California Air Resources Board certification of a carbon intensity score of -339 g CO2e mj, which will be used in calculating California's low-carbon fuel standard credits. Under current LCFS modeling, RNG produced by GEVO RNG is expected to yield upwards of 175,000 metric tons of carbon dioxide equivalent greenhouse gas emissions reductions annually, as it continues to explore increased scaling and margin expansion opportunities for its RNG business.